What is up, traders, and welcome back to Explain the Charts. Today is October 3rd, 2025, and we are doing a deep dive analysis on Alphabet, ticker symbol Google. First, we'll cover the massive news catalysts that have recently driven the stock, and then we'll jump into the charts to break down the key price levels you need to be watching. The biggest story for Google recently has been the overwhelmingly positive outcome of its landmark antitrust case in early September. The court ruled against the harshest remedies, meaning Google does not have to break up its ecosystem by divesting Chrome or Android. This news was seen as a monster win by analysts, removing a huge cloud of uncertainty that had been hanging over the stock. This single event was the primary catalyst for the stock's incredible 14% climb during the month of September, pushing it to new all-time highs. On top of the legal victory, Google has been making significant strides in the consumer AI space. The company launched a new viral image generator called Nano Banana through its Gemini AI, which shot the Gemini app to the top of the App Store charts, surpassing ChatGPT. This has helped to calm investor fears that Google was falling behind in the AI race. Fundamentally, the company continues to invest heavily in its future, announcing a $4 billion data center project in Arkansas. Despite the strong performance, sentiment is somewhat mixed, with some signs of profit-taking after the massive run-up. However, the long-term outlook is underpinned by strong analyst support and strategic growth in its AI and cloud divisions. Now, let's look at how this news translated to the price action on our daily chart. We can see a strong, established uptrend throughout most of 2025. The most significant event is right here on September 3rd. The stock closed around $211 the day before, and then gapped up massively to open around $226 on the antitrust news, a truly explosive move on enormous volume. This rally continued throughout the month, culminating in a new all-time high of $256, which was hit on September 19th. That $256 level is now our key resistance area to watch on any future upward moves. Since hitting that peak, the price has seen a healthy pullback and is now in a consolidation phase. Let's zoom in on this recent period to get a clearer picture. Here we can see that massive gap from September 2nd to the 3rd much more clearly. The price never looked back, climbing steadily for the next 2 weeks. Following the peak at $256, we've seen the stock pull back and find a base of support. This lower boundary of the current consolidation range appears to be right around the $239 to $241 area. This is our most immediate and critical short-term support level. A more significant, long-term support zone is the top of that gap, right around $226. Typically, markets do not like to leave large gaps like this unfilled, but the strength of the catalyst might make this a breakaway gap that acts as a new floor for the stock. Switching over to the 1-hour chart, we can analyze this recent consolidation in more detail. Since the peak near $256, the price has been forming a series of lower highs and lower lows, defining a clear downward channel. Over the past few days, this downward momentum has stalled, and the price has begun to move sideways. The $245 level has been a key pivot point, with the price frequently crossing above and below it. For a short-term bullish case, we would need to see a decisive break and hold above the recent resistance in the $247 to $248 area. Conversely, a break below the recent lows around $241.65 would suggest the downtrend is resuming, with a potential target of the $239 support level we saw on the daily chart. Finally, let's drill down to the 15-minute chart to look at today's intraday action. Today has been a battle between buyers and sellers. The stock saw an intraday high of $246.30 and a low of $241.65. These two levels define the trading range for today and are critical for any day traders. We can see a sharp drop midday followed by a slow grind back upwards, indicating some resilience from the buyers. Volume appears to have picked up on the move down and on the subsequent bounce, showing active participation at these levels. The price is currently struggling to reclaim the middle of this daily range. So, to summarize everything, let's go back to our daily chart. The key resistance level to watch is the all-time high at $256. Shorter-term resistance is found around $247. On the downside, our primary support area is the recent consolidation low between $239 and $241. A much larger, more significant support zone exists at the top of the breakaway gap, around $226. So, what are the likely scenarios? A bullish continuation is certainly possible, given the powerful fundamental news. For this to happen, we need to see the price break out of this consolidation and decisively clear the $250 mark, opening the door for a retest of the $256 all-time high. I would place the likelihood of this scenario at around 65%, especially if we get more positive news regarding AI or upcoming earnings. A bearish scenario would involve a failure to hold the $239 support level. A break below this could trigger a deeper correction, with sellers potentially targeting the gap fill area around $226. Given the strength of the recent news, I'd put this at a lower probability, around 35%, unless broader market sentiment turns negative. In the immediate short term, the most probable outcome is continued range-bound trading as the market digests the recent gains. Look for a breakout of this range between $241 and $247 to signal the next directional move. That's our analysis for Google today. Please remember, this video is for informational and educational purposes only and should not be considered financial advice. Trading and investing involve risk, and you should always conduct your own research and due diligence before making any financial decisions. Thanks for watching Explain the Charts, and we'll see you in the next one.